Credit card debt in the U.S. has reached a staggering record high, topping $1 trillion for the first time. This, according to the Federal Reserve Bank of New York, as millions of cardholders carry balances month after month, year after year. CNBC's senior personal finance correspondent Sharon Epperson joins us now with strategies to help them pay it off. You got to pay it off. Their interest rates are so high.
You have to pay it off. But it's inflation and robust spending that's really helped push Americans' overall credit card balances past the $1 trillion mark in the second quarter. And that's according to New York Fed researchers. After a series of Fed rate hikes, interest rates, though, on credit cards have now risen to over 20% on average. And that's making it an extremely expensive way to borrow money for Americans using credit cards to cover basic household costs and many other expenses, too.
It's not just folks who absolutely have to use cards. It's folks who are doing it because they want to. Maybe they're investing in a small business or remodeling a house or whatever the reason might be. You have folks with a lot of money who are running up credit card debt.
And many of them are carrying that debt for months or even years. So here are a few strategies to help pay it off. First, call your card issuer and ask for a lower annual percentage rate. A LendingTree survey found about 3/4 of consumers who asked for a lower rate in the past year got one. Also, try to snag a 0% interest balance transfer card. These cards offer 12, 15, even 20 months with no interest on transfer balances. Now, once you get one, you got to be aggressive about paying off as much of the balance as you can during that introductory period. And if you have balances on multiple cards, figure out whether you are going to prioritize paying off the highest interest debt first or start with the smallest balance and work your way up to the largest balance. One strategy isn't necessarily better than the other. Experts say just make a plan, stick to it, and get it done.
Get it done is the most important thing.
That's the most important part.
A lot of consumers will have to make a lot of tough choices when student loan repayments are due again in the fall. So what are some tips, advice that you would give them?
Well, you know, there are tens of millions of people that are carrying debt year after year. And so that is a big concern now with student debt repayments starting in October. That's a big X factor. Will people be able to afford to make their credit card payments? So now is the time that financial advisors are saying, make sure that you find out what you owe. Call the loan servicer, which may be a different one than 3 years ago. Make sure you understand what you may owe if you do an income-driven repayment plan. And that may be a way to cut those monthly payments, maybe even in half. The problem for parents who have loans, those plus loans do not really fall under income-driven repayment plans. So that's going to be really tough. So budgeting and making these hard choices is what people are going to have to do.
But just like any debt also, Sharon, you have to consider the interest rate that you're paying, right?
Yes.
And so your credit card debt might be a much higher interest rate than your student loan debt, and you do have a grace period on your student loan debt.
You have 12 months before it hits your credit report, so that's very important, but I think that's a really important point. This is a variable rate that's going to go higher on credit cards. Fixed rate loans, that's something that you, again, have to prioritize that perhaps higher interest debt and getting that paid off. But finding out if there's some way that you can try to budget those payments, putting that money now in a high-yield savings account, that's the silver lining of these interest rate hikes, that we're getting more money on our savings in those high-yield accounts. Try to do that so that you're prepared for October or whenever you can finally start to make those payments.